Let's buy some stocks. Ever wanted a piece of your favorite companies? Now you can. Buying stock means you own a tiny part of that company. It's exciting, right? Don't worry, it's not as complicated as it sounds. We'll break it down step by step. Soon, you'll be navigating the stock market like a pro. First things first, you need a brokerage account. Think of it like a bank account for your stocks. It's where you'll buy, sell, and keep track of all your investments. Once you've got your account set up, you're ready to start picking stocks. Do your research. What companies do you believe in? Which ones have products or services you love? Investing in companies you understand is always a good start. Remember, investing always comes with risks. But with careful research and a little bit of luck, you can watch your money grow over time. Ready to get started? Let's do it. Choosing the right brokerage is super important. It's like choosing the right pair of shoes for a marathon. You want something comfortable, reliable, and that fits your needs. There are tons of brokerages out there, each with its own pros and cons. Some are geared towards beginners with simple interfaces and helpful resources. Others are for more experienced traders offering advanced tools and research options. Brokerage advisor. Media, a financial advisor pointing at a chart showing different brokerage fees. When picking a brokerage, consider the fees they charge. Look for things like trading commissions, account maintenance fees, and inactivity fees. You don't want to be surprised by hidden costs. Also, check out the brokerage's platform. Is it easy to use? Does it have all the features you need? Take some time to explore different options and read reviews before making your decision. The right brokerage can make your investing journey smoother and more enjoyable. Now that you've picked your brokerage, it's time to open an account. But wait, there are different types of brokerage accounts, each with its own purpose. The most common type is a standard brokerage account. This lets you buy and sell stocks, bonds, and other investments. It's a good option for most investors. Young investor. If you're saving for retirement, you might consider opening an individual retirement account or IRA. These accounts offer tax advantages to help you save for the future. There are also specialized accounts for specific goals, like education savings accounts for your children's education. Think about your investment goals and choose the account that aligns with them. Remember, you can always open multiple accounts if needed. Don't be afraid to ask your chosen brokerage for guidance. They can help you pick the perfect account for your unique needs. Section 4, making your move, buying your first stock. All right, you've got your brokerage and your account. It's time for the fun part, buying your first stock.
First, log into your brokerage account and search for the stock you want to buy. You can search by company name or stock symbol, which is the unique code for each stock.
Once you've found the stock, you'll need to decide how many shares you want to purchase. Each share represents a small piece of ownership in the company.
Next, you'll choose your order type. We'll delve into the different types in the next section. Finally, review your order and hit that buy button.
Congratulations, you're officially a stockholder. Remember, investing is a marathon, not a sprint. Don't put all your eggs in one basket. Diversify your portfolio by investing in different companies and industries. Section 5, market orders versus limit orders. What's the difference? When you're ready to buy or sell a stock, you have two main order types, market orders and limit orders.
A market order is like saying, buy this stock right now, at the best available price. It's the fastest way to execute a trade, but the price you get might be slightly higher or lower than what you saw on the screen just moments ago. The market is constantly moving.
A limit order, on the other hand, is like setting a price target. You're saying, only buy this stock if it reaches this specific price. This gives you more control over the price you pay, but there's no guarantee your order will be filled if the stock doesn't reach your target.
For beginners, market orders are usually the simplest option. But as you gain more experience, you can explore using limit orders for more control over your trades. Remember, there are other order types too, each with its own nuances. Don't hesitate to do your research and learn about them as you become more comfortable with trading.
Section 6. Congratulations, investor. Now go get 'em. You did it. You've taken the first steps towards becoming an investor. It's an exciting journey, full of learning, growth, and hopefully, some profits along the way.
Remember, investing is a long game. Don't get discouraged by short-term fluctuations. Stay focused on your goals, do your research, and don't be afraid to ask for help when you need it.
The stock market can be intimidating at first, but with the right knowledge and a little bit of courage, you can navigate it like a pro. So, what are you waiting for? Start exploring, start learning, and start building your financial future today.